we're going to be looking at my execution over last week's German State CPI. That would be the Saxony print, so the first state that we get the data for, and going to look at how executed in the Bunds, and going to kind of tie this in with something that we see our elite trader doing quite often, which I've spoke about a few times before, and little ways that you can tweak your execution on these comments or data points, and how I've been applying it to my own trading. And I'm then going to bring it into how the Bund's been trading at the moment, especially on kind of fast down moves that we've seen, because starting to see a bit of a pattern with like yields at all-time lows and bonds pushing ever so higher, and just how it seems to be reacting, and just some things that you can kind of tie into your own trading just to be aware the technical landscape going into this. So this is the day that we were looking at. So the Saxony CPI comes out at 8 AM. So we'd formed the initial balance between, I think, around 32s and 18s. And just broadly, we've put a pretty weak close on the prior day, and then we'd gapped down in the overnight session and opened outside of the prior day's range. Now, this doesn't mean anything, it obviously shows a bit of weakness in the market, but it had it in my mind that if there was a strong number, given the kind of ECB's rhetoric of being particularly dovish, in the expectation of weak data coming through. So any really positive data, just thought that given that we're so high in the bonds, there might be an opportunity to roll over, and certainly having these two daily lows, the first one coming in at 12s and the second one coming in at 95s as good targets. Now we talk about this quite a bit. Is just looking at the data that comes through. So the way that the German State CPI works, for those that you don't know, you have an expectation for the overall German figures. So we had 0.1% month on month and 1.4% year on year. And then as the individual states come through, the market kind of reacts depending on how they expect it to kind of balance out, or the calculated overall figure would balance out related to the broader German consensus. So just looking at the ladders here, we can see my Bund ladder in the middle, Euro, and just your BOBL ladder, should you wish to look, something I'm going to talk about a little bit later, how I can potentially start to tie in utilising the BOBL a little bit in this instance as well. So generally for these sort of things, the Bund and Euro should be inversely correlated. So a better than expected inflation figure would see the Euro push higher and the Bund sell off. So I didn't execute in the Euro, but quite often use it as a bit of a proxy. If you see the Euro blip up and hold a kind of high, then it gives you a little bit more conviction to stay with the trade. So this is queued up for 9:59 and 51 seconds. And we're going to see for the 8 o'clock, we have this daily low, which comes in at 12s, and then the other one, which we'll see, which comes in at 95s. And really my theory was any beat, firstly, this number should definitely go, potentially on the blip, the first blip down. And then if we can kind of pull back, consolidate, and you feel like there's still room for it to offer, I was looking to kind of get out of a lot of my position quite quick, but then be willing to re-enter in that second phase, which is what the specific execution style, which I've taken from our elite trader and kind of built into my own trading. It's what I've really kind of demonstrated here, just that I've started to actually utilize that to good effect in the right instance. It was just the case for this type of price action, as we're going to see with quite kind of volatile rotations. It just suited it quite well, and it was only afterwards when I really thought about it, I thought this is kind of the instance where it's really quite good to have that execution style in your locker for if you do observe this type of price action. So the initial move is going to be quite quick, so in 10 seconds or so we'll see how I execute, and I'll pause after the initial kind of flush. So you can see I'm hovering over the sell already, 58, 59, 8 o'clock, So I hit 20 lots at, well, 10 lots at market, missed a fill, then hit another 20 at 17s. I was actually trying to get more away at 17s, but because my size is capped at 30s and I still had the order in at 20s, it wouldn't allow me to do it. So again, just something else. But you can see we've held at the 12s level. So I'm quite happy to kind of sit on this a little bit, but I've scaled out some of my position. And then as we start rolling over now, getting closer to that level, I was trying to get more size in. So I'm just going to pause it there. So just to kind of sum up what happened here, we started at around 22s, we've blipped down to 12s, the level's held, pulled back, and then rolled over and taken the first level with the second level at 95. So my thinking here is I got quite good size on initially, a bit unfortunate not to get the full kind of 30 lots away. And really I probably scaled out of more than I'd wanted to in that first kind of pullback, but I did show that as it started to roll over, I was trying to get filled passively with another 5 lots, I think around these sort of prices. Now what I need to take from that is potentially to be more aggressive hitting up market as this does start to roll over, because there's a couple of instances of that where trying to get filled more passively, you kind of miss the opportunity where really my first target was 12. So anything that I was getting on here, I'd potentially want to be scaling out relatively quickly, you know, until the next pullback. So just going to play this on. This is real time, by the way. So as we've pulled back now, given that that 95s is still intact, I think a couple of guys on the floor were talking about 94s. I kind of felt like still seeing enough selling in this 14s to 17s range to warrant getting a little bit more size in for another break of the low. You know, for me, it felt like it was quite a significant beat, given the expectation and the central banks that are in play. So I added another 5 lots, I think, on the pullback to 14s, and unfortunately scaled out of that as it went against me, but kind of feel like that's okay. In this situation, you know, I'm willing to be quite dynamic, you know, being quite rational, talking with the guys on the floor, you know, this should roll over and have more room to go. So I was willing to kind of get chopped up a little bit on what I was adding with a view that I just wanted to build my position and try to maintain some size, or at least something in to those 95s. You know, I don't expect to be holding 10 lots all the way down. Given that I only got 20 lots in on the first initial move, I don't really like to get more size away on the second phase, given that you can end up just kind of messing up your position. I kind of want my sizing to dwindle unless something really changes until the targets are hit. So you can see I'm already eyeing up the 94s and this kind of area just in case we test towards the 95s and then fail and reverse. I'm quite happy to get something out of this at this time. So at this moment, I don't think I've really made that much from what I've added into the pullbacks, but it's a good bit of progress for me to see that I'm kind of trying to do it a little bit more now. You know, my natural instinct is after that initial flush, we pull back. If the targets are still in play, then I'm willing to add a little bit more into my position, just so long as I'm not taking more risk than I was taking on the initial best part, highest probability part of the move. So as we're rolling over a little bit now, trying to get a little bit more in, but again, just not really getting filled. So probably getting a little bit too aggressive here, selling 5 lots into 6s and then going immediately offside, but willing to kind of take a little bit of a hit and scale out, expecting that really the closer that we get to these 95s now, the higher the probability with sustained volume that these are looking to go. But just seeing the price action that happened there between 5s and 6s, I think we down ticked 5s and then immediately bid back up and then held a bid at 7s. So I was quite conscious that, you know, if this price continues to hold, it looks as if there's a buyer kind of sat there, as you can kind of see as we've broken through now, down tick 3s, but then bid up 4s again. So It's kind of showing that there's a little bit of support here, but still getting ever more closer to the 95s. So not really looking to get any more in at this stage, because I had a feeling that we could still have another pullback before the next rollover. And really, after I've seen that price action, you know, the downtick 4s and 5s, and then the downtick 3s and back up to 4s, and now we're rotating higher. It's kind of showing me at the moment that, you know, I'm seeing some support. I don't really want to get too aggressive into these lows. I understand how far the Bund can squeeze for these down moves at the moment. So really willing to just be patient, wait for the next pullback. And then if I see the offer step back in this kind of 14s to 17s range, then perhaps, you know, I can build a position looking to kind of take out 3s. So make a new low targeting the 94s, 95s. But you'll just observe the kind of velocity has slowed down somewhat. It was very fast. It's now just started to quieten down. And often when this happens, a lot of people who are short, it's easier conditions for them to start to get squeezed out of their position. And you can see it bid over quite kind of quickly. I was looking at getting filled, selling a little bit more as 08. But I think really now what I'm seeing is we haven't made new lows. We're kind of rotating higher at this stage. So the mistake I've made is getting too aggressive, fading this pullback in this second phase too early and really messing up quite a good trade. So just a matter now of, as it quietens down, see how far it wants to pull back. If we then see the velocity start to pick up, more volume churning, and start to roll over, then I know that I've got these targets that I can really attack a little bit more on the next phase, the next rollover, the next move down. So really just watching the offer quite closely in this area now. Want to see some absorption, want to see bigger clips getting absorbed, and then, you know, people hitting down at market. So you can see 13s just starting to kind of show a bit of absorption, and then someone selling down into 12s. So I'm not looking to get mega aggressive, because obviously these sort of pullbacks can take a little bit of time, 3-4 minutes sometimes, and you want to be able to set the boundary of the pullback so you can identify where your stop is, so you don't get too caught up fading just something that bids over the next 10 ticks or so. But you can really tell this kind of quietened down now, but certainly something's been observed in this 12s, 13s area. Now we're seeing 100 lots step down, selling into 10s, and only 10 lots trading up into 11s. We've taken 10s offered, 300 lots bought at 10s, so a little bit of support there. But I think really now at this point, I was hoping that we would pull back into this 12, 13s area so I could start to work my position a little bit more. And usually this is where I would kind of give up on the trade. I'd be like, oh, you know, we haven't hit my targets. It's done the first part of the move. I've made a little bit of money, and I'm guilty of sometimes sitting back and trying to bank too early in that case. You know, there's still volume going through. There's still good structure, good kind of fundamental reason for this market to roll over, given that you would expect the positioning to be relatively long. And we're also waiting for the next numbers to come out as well. So if the subsequent numbers come out, I think Brandenburg may be the next one. If that comes out and that's also a beat, then you could see the market unwind even further. So understanding that the last pullback came to 13s, start to feed in my clip a little bit from 10s upwards, but it's still quite quiet. You see 200 lots buying into 10s. I think that was the same price. There was a 300 lot buying earlier. So just need to see something a little bit different. And you can see about 8 minutes have gone since the initial move. And this is where my focus can really wane, as I said before. So it's really about understanding that there can be more to come in these moves. It's not just the easy money, it's not the fast money that's always the easiest. Quite often it's being patient, and that second phase can offer an even better move than the first. So 12s was where we saw the seller, 12s, 13s saw the seller stepping before. You know, the offer seems to be holding a little bit here. Can't really take 12s bid. The offer pulled a little bit, 135 lots hit into 12s, and then the offer stepped down again and reloaded and restacked up to sort of 250 lots. So kind of seeing enough in this area now that really I could probably be a bit more aggressive in working the offer a little bit in this zone. And now my risk's pretty tight. I mean, I don't really want to see it above 15s in this instance. I don't want to mess up what's been an okay trade to start with. But if I start to see what I want, really you've got to be quite aggressive at attacking this sort of level. You've got such good targets, 3s and 95s. As the offer now starts to step down, I think 500 lots or so sold into 10s and then held offered. I haven't really got anything on at the moment. I've only got one lot on, but really I should be gearing up to be getting between minimum 5 to 10 lots, given that, you know, the biggest size I had on the first move was 20 lots. I think that's probably adequate in this situation. But still, the key kind of reference points that I highlighted on that first kind of pullback, they've held. So there's no, that you shouldn't worry too much in this situation. I've just scaled out of half back down to one lot, but there's no real need because your risk is so tight at the 15s. You can afford to hold minimum kind of 3 lots, 4 lots in this kind of area and just let it move about a bit. But you see the offer now just starts to be stepping in, seeing a little bit more movement on the book than we were seeing before. But then 10s, there's still this buyer at 10s, another 300 lots bought, and then 100 lots sold down into 10s. See, 100 lots sold into 10s, and then the book was stacked to 400 lots. So really now, after 12s and 13s being tested for the second time and seeing the same price action, as you can see here, I wish that I had more on in this sort of area. So it's kind of the wrong way round to do it. You don't want to wait for it to go and then just be hopeful there'll be another pullback, because inevitably the third time it pulls back, if it does take out that level that holds, you're going to be wrong and you're going to have kind of been attacking a position that's telling you something that you don't want to see. But now I've definitely seen what I want. The lower the day at 3s has to go and really should start popping through 95s. So trying to get more on, missed a fill at 5s. Seeing it start to release, it's taken out the low of the day. We've got 1,000 lots sat at 95s, so I kind of feel like this could fail either just before 95s or just through it. But I really want you to pay attention to the price action we see, I think 92s, 93s, 94s, as we do take out that daily level. At this point I was kind of chasing up a little bit, and then really I felt, what's just to leave a one lot running. If the level gets taken, it gets taken. If it starts trading back up into this 6-7s area, then I'll get out. So you see now it's quite easy. It's held at 95s, the 1,000 lot there. But that 1,000 lot was actually taken out, and just if you see there, we downticked 93s, 94s and immediately bid up. And whenever I see that sort of price action, to me it kind of shows that there's someone who's set, I don't know, an iceberg or something at 94s. So as it's been taken out, it immediately bids up. And when it's followed by this fast kind of move, 4 or 5 ticks above that level, to me that's a good signal of a reversal pattern when I've seen that the bonds don't really want to extend lower. They're seeing these daily levels, such as 95s, more as targets than as levels to break and have these momentum moves through. So really this is a good time, the fact that I've been aware of that, to try and work something in this level. You've got such tight risk below 93s, get something on. We've seen it twice now, so we've downticked 93s, 94s, bid up 4 ticks, tested back down to the daily level, and now we've bid up again. It's a bit of a green light just to get something on. All these little tweaks that you can make to build on your basic execution strategy for the data point, they can really just start to skew your profitability in your favor. If when it is working, you make just a little bit more, an extra 5% here, 5% there, over the course of, you know, a large number of moves across the year, you're going to start to make more. You're going to be getting more for more reward for the risk that you're taking on the initial kind of high volatility move. But I'm not going to show the rest of it because it's too long and I wasn't actually trading it. But after coming down, taking that level, and then the fast down, tick up, test back down, that was actually the low of the day, and it pretty much reversed the entire move, which I'm going to talk a little bit about now just as I come to finish off.